Good day Forex trader. Eur USD Forex signal, rebound to 1.1385 can't be ruled out. The pair will likely attempt to recover today as investors buy the dip. Bullish view. Buy the Eur USD and add a take profit at 1.1385. Add a stop loss at 1.1150. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1185 and add a take profit at 1.1100. Add a stop loss at 1.1300. The Eur USD declined sharply during the American session after a hawkish statement by Jerome Powell. The pair crashed to a low of 1.1240, which was about 1.27% below the highest level this week as the Omicron concerns remained. Eurozone inflation rising. Like in the United States, consumer prices in Europe are surging as energy prices rise and supply disruptions remain. On Tuesday, data published by Eurostat showed that consumer prices in the Eurozone rose by 4.9% on a year-on-year basis. This was significantly higher than the previous 4.1%. It was also higher than the median estimate of 4.5%. Most of this inflation was because of food and energy prices. Excluding the two, the bloc's inflation rose from 2% in October to 2.6% in November. The harmonized inflation also rose to 2.6%. These numbers are significantly higher than the European Central Bank, ECB, target of 2%. Still, there is a likelihood that the bank will not abandon its monetary policy framework since it believes that the current inflation trend is transitory. The Eur USD also dropped after the latest testimony by Jerome Powell. In it, he warned that the Omicron variant brings several risks to the economy. It risks worsening the current supply chain situations and hurt job growth. Also, it could push inflation higher in the coming months. Therefore, he hinted that the bank will accelerate the pace of its quantitative easing tapering. While it is too early, analysts believe that Omicron poses risks because it is spreading faster than other variants. Also, it seems evasive of the current vaccines. In a statement on Tuesday, Moderna CEO warned that it could take months for companies to develop vaccines to handle the variant. Today, the Eur USD will react to the latest German retail sales and European and American inflation data. The market will also watch the latest ADP jobs numbers. Eur USD forecast. The Eur USD erased most of the gains made in the past 2 days after the overall hawkish statement by Jerome Powell. The pair is trading a few points below the 23.6% Fibonacci retracement level. It has also moved slightly below the 25-day and 15-day moving averages. It also moved below the neckline of the inverted head and shoulders pattern. The MACD has moved below the neutral level. Still, the pair will likely attempt to recover today as investors buy the dip. If this happens, it could move and retest this week's high of 1.1385. GBP USD Forex signal. Sterling could crash to 1.3100. The pair will likely keep falling as bears target the key support at 1.3100. Bearish view. Sell the GBP USD and add a take profit at 1.3100. Add a stop loss at 1.3300. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.3300 and a take profit at 1.3400. Add a stop loss at 1.3250. The GBP USD pair was under pressure during the American and Asian sessions as concerns about the new Omicron variant rose. The pair tilted lower and dropped to 1.3200, which was the lowest level since December 7, 2020. Omicron worries. The biggest concern for the GBP USD is that the number of Omicron cases has risen in the United Kingdom in the past few days. Scientists are worried that the situation will get worse because of how quickly the variant is spreading. Also, scientists at Moderna and Pfizer have warned that the new strain is significantly different from the previous one. As such, there are concerns about whether the existing vaccines will be able to deal with it. In an interview with the Financial Times, the chief executive of Moderna warned that it could take a few months to develop a vaccine that works. Therefore, the new variant could interrupt the UK and US recovery. For one, it could disrupt the ongoing labor market. In the past few months, the two countries have seen their unemployment rates decline substantially. Another risk is that it could disrupt supply chains as more people working in ports and truck drivers fall ill. This, in turn, will likely see inflation keep rising. Recent data showed that US inflation has risen to the highest level in more than 30 years. The UK inflation has also risen to the highest point in more than a decade. The top movers for the GBP USD pair will be the latest Home Price Index, HPI, data by Nationwide. Analysts expect the data to show that home prices rose by 9.3% in November as demand outpaced supply. Market will also publish the latest UK and US manufacturing PMI data. Economists expect these numbers to show that the PMI in the two countries rose. GBP USD forecast. The GBP USD pair crashed hard after Jerome Powell hinted that the Fed will increase the size of its asset purchases at the December meeting. The pair dropped to 1.3200, which was about 1% below the highest level this week. The pair managed to drop below the 25-day and 50-day moving averages while the MACD moved below the neutral line. The pair is below the dots of the parabolic SAR indicator. Therefore, the pair will likely keep falling as bears target the key support at 1.3100. AUD USD Forex signal, strong bullish bounce. The pair remains a key barometer of risk sentiment. Last Tuesday's AUD USD signal was not triggered as none of the key support and resistance levels which I had identified were reached that day. Today's AUD USD signals. Risk 0.75%. Trades may only be taken prior to 5 p.m. Tokyo time Thursday. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7205 or 0.7271. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7070 or 0.7061. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. AUD USD Analysis. I wrote last Tuesday that it looked likely that there was enough bearish momentum to keep the price moving downwards over the course of the day. However, I also thought that the two clustered support levels around 0.7150 looked somewhat likely to hold up if reached. The price moved little over the course of Tuesday, but the directional bias was slightly bearish. The price has fallen since then, so my call was on the right track. A few hours ago, we got a release of Australian GDP data which, although recessionary, was better than had been expected, with the Australian economy contracting slower than generally had been thought. However, this had little impact on the price, which was hugely overshadowed by Jerome Powell's comments at the U.S. Federal Reserve, suggesting tapering might come earlier than had been expected. This produced a big risk-off swing which sent the price down to a new one-year low, before the market swung back hard as the price here made a big bullish bounce off the support level at 0.7070. The price got back to highs at around 0.7175 before starting to fall again, with short-term momentum again turning bearish. There is volatility in the market and this pair as a key risk barometer is likely to be in focus and see large price swings. The problem is that the market is waiting for news on the likely effect of the Omicron coronavirus variant, and until that happens, we are likely to see big swings up and down. If you must trade before more clarity emerges, the best approach will probably be just to trade the turning swings using a shorter time frame for entry and a higher time frame for direction. This currency pair is now suitable for this kind of short-term trading.